All right, guys, welcome back to the channel Trading Simplified. Today we're going to talk about Fidelity MSCI Financials Index ETF, ticker symbol FNCL. This is a great ETF offered by Fidelity that covers banks and financials, and I think you're going to like what I have for you. All right, so looking at FNCL's prospectus, we can see that it seeks to provide investment that follows 80% of the MSCI USA IMI Financials Index. So FNCL is going to invest at least 80% of its assets in securities that follow this underlying index. So for those of you that are asking, what is Fidelity's MSCI Financials Index ETF? This is what it is. FNCL is going to track a digestive cap weighted index of U.S. financial companies across the entire market spectrum. So there are a ton of funds that try to mimic the MSCI sector indexes, especially the Finance Index ETF. But I just want to show you the FactSet gives FNCL an A rating out of 100, 99 on the ratings for efficiency, the trading, and then the F. So they're overall, they have excellent reviews, and this is the fund that can easily follow MSCI financials and has been doing it for many years. So I just want to break down more specifically the performance so you can see that this fund really is a powerhouse. All right, so to review the top 10 holdings of this fund, we have Berkshire Hathaway, which everybody knows, at 8.23%, JP Morgan at 8%, Visa at 7%, MasterCard at 6%, and the list goes on. These top 10 holdings make up 44% of this fund. So these are nice quality companies with Berkshire, JP, Visa, MasterCard, Bank of America. We all know these companies, very reliable. It's nice to have them as the staple of the ETF. Next, it just shows you your top 3 holdings here, which we reviewed. And you just need to know when you buy this FNCL, Berkshire Hathaway, JP Morgan, and Visa make up over 22% of the fund. So if you're going to buy this, just make sure that these top 3 to 4 companies you believe in long term, because they are basically making up a large 20 to 30% of the fund. All of the stocks basically are in the United States at 97%, and they're large cap oriented, which means they have over 100 billion in assets. And the top sector, like we said, it's financials at 99.35%. And the sponsor is Fidelity. They are the ones that created this ETF to mimic the financial sector. All right, so reviewing the composition of FNCL, the asset classification is equities only stocks. It's passively managed in the financial sector. As you can see, we're basically in North America for this. And besides those top 10 companies, we have a total of 413 other companies within this. So the top 10 make up 44%, and then the remaining make up 55%. So you're very heavily oriented in just these top 10. But in my opinion, I like these companies. I think it's good to have them as the large concentration of this. I just wanted to show you the market capitalization. Large is 36%, giant 31%, medium 21%, and small and micro, a little bit of them, 7 and 2 to 3%. And as you can see, this is our blend. So we have a blend of value and a blend of growth, which I like. So the company can still, this ETF can still continue to grow. And here you go, financial services, 28%, the banks, 25%, capital markets, insurance, consumer finance, and mortgages. That's what makes up your ticker symbol FNCL. All right, so looking at the distribution expenses, we get a dividend yield of 1.79% each year. And the gross expense ratio, which is lowest against its competitors, is 0.08%. Let me just show you with the comparisons real quick. When you compare FNCL, which is right here on the top left, look at the expense ratios right here, 0.08% compared to VFH, which is Vanguard's financial index, 0.1%, XLF, 0.09%, IYG, 0.4%, and RSPF, 0.4%. So you're getting a lot of bang for your buck, and you're not getting eaten away by the expenses, the gross expense ratio or the net expense ratio. So let's break down the performance and risk. A growth of hypothetical $10,000 invested in 2013, you would have 2.5 your extra money, because it went from $10,000, as you can see right here, to 20 grand to about 27 grand. So not a bad return over 10 years. So that's awesome. You got a nice double in there and a little bit more. Now, if you're really looking at the life, which I think is the most important, look at the NAV return here. On the life of the fund, you're getting 10.63%. That's awesome. That's in comparison with the S&P. So the financial sector is definitely something over the long term has proven itself to do very well. So that's why I like to see consistent returns over 10 years or more. And even just the last year, it was up 14%. So you have fluctuations from 9 to 14%, but we average around 10% each year, which is what I'm looking for if I'm going to passively invest. Looking at the key statistics, FNCL is an ETF. It's an open investment company. It is not leveraged. It is not inverse. And it is sponsored by Fidelity Management and Research Company, LLC. Looking at the portfolio fundamentals, the net expense ratio of FNCL is much lower than the sector equity median, 0.08% compared to 0.5%. The gross expense ratio, 0.08% compared to 0.51%. The dividend yield, very close, 1.69% compared to the 1.61%. So looking at the life of this fund, 2013-14, we started at $25, which is what most ETFs open up at, and you are now at $60. So if you were buying this right from the get-go 10 years ago, you have made excellent money from $25 up to $60. This just shows you that financials is building some momentum up here. So if you're going to start buying this fund, definitely recommend dollar cost averaging and not just doing all of your money, because we have had some drawbacks. Look at the COVID era during 2020. This was the drop from $45 all the way down to $25. So there are pullbacks. There are risks associated with buying ETFs, especially because it's specifically to one sector. So you just have to be careful. So this would really just be a dollar cost average opportunity. You're buying at all-time highs. Just be careful with that. It depends when you're watching this video, because we'll see where it is a year from now. But just keep in mind, dollar cost averaging is always the best way to get into funds long term. All right, guys, if you like this Fidelity ETF, take a look under my playlist under the channel Trading Simplified. Playlist is called Fidelity Index Funds and ETFs, where you can see I've made other videos about Fidelity's funds, such as FSPGX, the Growth Fund, FSSNX, the Small Cap Fund, FSRNX, the Real Estate Fidelity Fund, FSELX, the Semiconductors Fund. And then if you just want to make up automatic investments, I put that in here as well, just to show you. It's a quick run through on how to set up automatic investments if you're going to just buy index ETFs or index funds long term. And then one of my personal favorites, the Fidelity Zero Total Market Index, which you can invest, that is offered by Fidelity. So check out these videos. I'm sure you'll like them. I try to break them down for you and just give you the composition and how they work. So if you feel like you learned something of value, please subscribe, like, and leave a comment in the section below. I always appreciate it.